Overnight, physical silver prices jumped nearly 5%, right as the Federal Reserve locked their interest rates in place. A metal trading overseas and a boardroom decision in Washington together dictate exactly how much your money is worth today. To understand why, we need to trace the cash. We are going to follow the money from the hands of institutional policymakers straight down to the physical choke points of the global supply chain. Tracking this macro to micro flow serves as a reliable defense against the compounding risks of domestic inflation and overseas conflict. The anchor of this entire financial system sits at the Federal Reserve. By an 11-to-1 vote, policymakers decided to keep the benchmark federal funds rate locked at 3.5 and 3.75%. Chairman Jerome Powell cited higher-than-expected inflation metrics and mixed signals in the labor market as the primary reasons they cannot safely cut rates right now. This is a chart known as the dot plot. It is a tool the Fed uses to project future interest rate moves, with each dot representing a single policymaker's forecast. Right now, they show a cluster of expected gradual easing stretching out toward 2026. But if inflation spikes again, pushing these dots higher for longer, it puts immense pressure on domestic capital. Expensive borrowing severely slows down the housing market and chokes off everyday consumer spending. To defend your portfolio against this specific domestic risk, you have to look for resilience. Sectors like utilities, healthcare, and consumer staples generally hold their ground when borrowing costs stay elevated. Because the Fed is stuck in this defensive posture, smart money is actively looking for safety outside of traditional cash and bonds. While U.S. policy stagnates, the commodities market is moving fast. In just 24 hours, physical silver surged nearly 5% on the MCX. The MCX, or Multi-Commodity Exchange, is a major electronic trading platform where investors buy and sell hard assets. This chart shows exactly where that momentum is coming from. As the U.S. dollar shows weakness, institutional capital is aggressively hedging against global uncertainty by pouring straight into precious metals. That uncertainty has a specific origin point. Escalating military tensions between the United States and Iran have put the entire region on high alert. The immediate threat to the global economy is mechanical. Millions of barrels of oil travel through the Strait of Hormuz, making these physical supply routes incredibly vulnerable to conflict. When these energy routes are threatened, oil prices climb. That spike in energy costs feeds directly back into the domestic inflation the Federal Reserve is currently fighting. However, precious metals carry heavy volatility. If the geopolitical tensions in the Middle East suddenly ease, short-term traders holding silver could face immediate, sharp corrections. A more balanced defense involves pairing gold with long-term silver ETFs. An ETF, or exchange-traded fund, allows you to invest in a basket of assets without having to buy and physically store the metal yourself. You should also monitor energy sector stocks, which historically capture gains during international crises. Middle Eastern regional conflict now functions as the primary engine, dictating both the cost of American borrowing and the price of global commodities. Beyond the data, there is a human element to this equation. Right now, market movements reflect raw human emotion and fear alongside underlying financial data. The dual threats of stubborn inflation and potential war trigger a powerful herd mentality. This drives retail investors into making panic-driven decisions, resulting in heavy, easily avoidable losses. Recognizing this widespread psychological fear provides the clarity needed to spot irrational market bubbles before they inevitably burst. The best behavioral defense is strict discipline. Rely entirely on rational data and technical analysis to chart your entry and exit points, completely tuning out the daily media hype. Domestic rate freezes, foreign conflicts, and surging precious metals operate as one massive interconnected machine. Surviving it requires a clear, cautious, and highly diversified strategy. If you found this breakdown useful, hit the subscribe button and share this video. We will be back with more real-time, data-driven financial insights soon.